How important is it to you to not only get the best price on a mortgage, but also to get the best service? Well, we're going to talk about what you may be missing today on the Peter McClellen Show. We start now.
Live from the Twin Cities, it's the Peter McClellen Show. Peter McClellen, CHFC, is the president of the 401k Latte Company. Peter has helped his financial planning clients for more than 20 years with advice about their money, their families, and their life goals. Find out more online at 401klatte.com. Invest in a conversation now. Here's Peter McClellen.
And welcome to the Peter McClellen Show. This is your host, Peter McClellen. Thank you for listening. I always want to say thank you. You know, it's always a pleasure when people stop me and say, hey, I heard your show, and I really liked that show, whatever they liked about it. And we do pride ourselves on having some very interesting topics, timely topics related to business. Again, we're speaking here on Business 1570, Twin Cities Business Radio. It's all about business. If you haven't noticed, I'm kind of pro-business. I think business is good. I think making money is good. It shouldn't be our God, but it's important to make money. It's a right thing. It's a good thing. So on that note, we have another interesting business today. We are joined by Brian Parkinson. He is a mortgage banker with RMG Alaris, right? Mm-hmm. Brian, welcome to the Peter McClellen Show.
Thank you very much. Pleasure to be here.
Yeah, great to have you here. And Brian, you know, in recent years, there's been such changes. We've seen mortgage people come and go, and yet you're in this industry. In a nutshell, why are you around when so many people have closed their doors and said, we're done?
Well, I tell you what, I've spent 16 years in the business. I found myself in an opportunity to meet with clients at their tables, talk about their future, talk about all the financial aspects. And I've just learned and grown to love the business. And a funny little story that I have for you. I was at a tire repair shop, actually getting a new set of tires, and I was working on my laptop, wearing a suit and tie. And the gentleman at the counter asks, you know, you've been in here for an hour or so waiting on your car. What do you do? And I told him I'm a mortgage banker. And a funny look came over his face, mortgage banker. Ooh, how's that going right now?
Oh, really?
You know, yeah. Okay. And this is an industry that serves people so well. It's such a big piece of their financial picture. And I'm a sales guy, relational type of person. It's a perfect fit for me. So I've chosen to stay in this industry and be a big part of their financial plan.
Right. Oh, I like that. I like the whole thing about being in context, because I think to some extent part of what maybe has been what's made life so unstable for so many people was this disconnection and just looking at getting the best rate and refinancing and getting money out of the house to buy their next toy. And I think those days are over. Mm-hmm. Do you not? I mean, even if people want to act kind of foolish, there's just restrictions now. Hopefully, we've tightened things up a little bit in the industry.
In the last 2 years, there have been tremendous changes in the types of loans that lenders will offer, in the programs and opportunities for consumers, where depending on your credit score, depending on your job, 5 years ago, just about anyone could get a mortgage. Right. And we have gone back to some of the old banking standards of saying you can only have this percentage of your gross income allotted towards your housing payment. Mm-hmm. And then you add your debt into that. We're only going to allow you to go this high. Whereas 7 years ago, I worked with a self-employed customer. He put no more than 5% down building a big house in rural Minnesota. His back-end ratio was 65% of his gross income. When you take
wait. You're saying he was spending on this house 65% of his income?
65% of his gross income covered his housing payment plus his debt.
Yikes.
You add in taxes, there's nothing left.
Macaroni.
Absolutely.
That's it.
Yep.
Whoa. Can they afford to heat the place? That's crazy.
Probably not. And you drive through neighborhoods and you see those clients, big house, no curtains, no landscaping, but that was happening. And there was this false thought of, we're going to continue to appreciate it 10 to 15% a year. I can never lose.
Yeah, you never lose in real estate, right?
Yeah.
Wrong.
So historically, you want to count on your real estate post-World War II to give you 4 to 5% return, or appreciation. And the consumers looked at this cash station, this piggy bank of giving them 10 to 15% a year, and just used that as a way to get the swimming pool, the cabin, the new cars, all the toys that they probably shouldn't be buying.
Wow.
That's not everyone.
Now I know this might seem terribly foreign. I'm a financial advisor. What about setting money aside to buy the pool, saving up to buy it? Would that be so horrific?
I think it's where we need to be. Yeah, absolutely.
Why not? Here's a novel concept. What about paying cash?
Sure.
How much is it? Okay, well, I don't have the money. I'll save. I'll put it off for this year. Do it next year.
Yeah.
Whenever. But why? This mindset that says, got to have it right now, got to have it.
Yep.
That's what I think has caused such tremendous instability. And unfortunately, and I won't go down this rabbit trail, but I think that same mindset of got to do it now is what has it's a plague that is bothering Washington, D.C. I think so many politicians in both parties have been willing to spend money we don't have. Because you got to have it now. We're in crisis. No. You guys are creating crisis. Calm down. Let stuff happen as it happens. I mean, the wind blowing all the leaves off the trees, of late, these past few days. Fine. There's a storm. Okay, we'll get through a storm, but let's not make it worse. And I get the sense that there's what Washington is doing to some extent is ridiculous. They're going back and taping the leaves to the trees for what? Let them drop. They'll grow back in the spring. There'll be, there's a cycle of things, and I just think that the more we don't do it. But I'm sidetracking because it's something I'd love to see them all get calculators and actually have a budget. That I know it's radical. I know I should be probably drawn and quartered for saying something that offensive, but they don't have a budget and they need one. Our country needs a budget.
Absolutely.
So I love the fact that you've been a part. We're talking before the show, Brian. Your firm was never one that made loans because here's a mirror fog it. Okay, you qualify, right?
Residential Mortgage Group, the ethics part of this company is a big thing that drew me to them. I was in a networking group 2 months ago, and there happened to be a real estate agent in that meeting, and she said 5 years ago there were loans that Residential Mortgage Group didn't want to do. You lost business because of that. That's the very reason why we are doing as well as we are today, is because our president made a choice years ago that these are not good loans. This is business that we should not be doing, and he chose not to do it while everyone and their brother in the market was doing it and making money off of that. So he made a strategic, he didn't make the strategic choice then because it's always been part of his business model, but it's always doing the right thing for the customer.
They probably had some people irritated with him, right? Come on, we're walking away from good business here. Well, it wasn't good business. It was right.
Imagine you're a salesperson and you're losing business to competitors because you didn't offer that same product. And as an all-commission salesman, sometimes that isn't that easy, but you have to look ahead. You have to look at the future. And fortunately, our leadership has always looked well beyond today.
You're fortunate to have that kind of leadership.
Absolutely. Yeah. So I got laid off after 14 years with one company as a senior leader, and I had an option to look at every mortgage company in town, and I selected Residential Mortgage Group, certainly not because they're the biggest or that anyone's heard of them, but it's because of their reputation and the quality of business and the ethics, and it's made the difference for my business.
Well, there's a saying that says the reputation is more important than gold.
Absolutely.
It really is. So I believe that. Now tell us, let's fast forward. You said a couple of years ago people were, doing these mortgages where, there were no requirements, basically. You didn't have to justify or prove your income. What's the end result of that today? Obviously, we're seeing tons of foreclosure. The mindset is what you touched on this in our conversation before going on the air about they had no skin in the game, so many people, and even those that can pay because their equity that they had is gone away, or if maybe they never had equity to begin with, and now they're walking away.
Absolutely.
That's a moral problem as I see it.
It sure is. And there was a period of time in the mid-2000s where Minnesota led the country in zero-down transactions. More than 40% of every purchase was zero into the deal. So fast forward 2 to 3 years later, and now we're in declining markets where you've lost 10 to 25% equity, there's no motivation for that consumer to stay in the house. So instead of writing it out and being respectful of the choice you made because others are walking away, they just decide, well, why would I stay in this house? I don't have any equity. I'm not going to stay here until it recovers.
And that's the fallacy, I think, of more government intrusion. Government can try to do something to save people's mortgage. No, if they don't have any, first of all, if they don't have the morals to do the right thing, maybe they'll take some help. I don't even know. I really don't fully understand what kind of help the government's tried to do with these, assistance to their, to stay in their homes. But if it's just going to be a Band-Aid, certainly the real estate values have declined and aren't going up anytime soon. Mm-hmm. So I just see it as perpetuating the inevitable. Some of these folks, obviously, when I said before that it's wrong, it's unethical to just walk away, I realize some of those that are walking away never intended to, and they're in trouble because they're out of work, and they're forced to walk away. It's a different thing than someone who just says, I don't like this anymore, I'm going to walk away. That's wrong. You talked before too about this whole issue of second mortgages. Is that something that's still going on? Are people still fooling around with first mortgage, second mortgage? Is that
taking second mortgages right now?
Well, or even at closing, to try to have to come up with two mortgages, one, the one main one, and then a second one.
Sure. I
didn't have something to put down.
Mm-hmm. Typically, you've got to have. An FHA loan is going to require a 3.5% down payment. Conventional typically is 5% down. The zero down is absolutely gone.
Good.
You can do a simultaneous first mortgage and a second mortgage in situations where it makes absolute sense. And again, it's all the structure of the transaction. For instance, a young buyer has a house to sell. He qualifies for both homes. He wants to buy a new house, but he can't come up with 20% down payment. What we did was a 10% second mortgage. He has 10% of his own money for a down payment. So with those two together, he can now avoid mortgage insurance. Well, a month later, he sold his house, took the equity from his house, paid off the second mortgage.
Nice.
So it was a structure that made sense for him.
Right.
What we don't want to do is position a consumer to where they're not going to win. It's going to put them in a position that won't be beneficial to them long term.
Which, unfortunately, some of your competition, you said, 40% out of all of them were that way a few years ago? 5-6
years ago, the zero down product was prevalent, certainly in Minnesota and throughout the country.
Yeah. And look at the fruit of what occurred from that.
When you don't have any equity and your house goes down 10 to 15%, some people say, why even stay here?
Right. Only because maybe they have a conscience, and you need to, if you sign on the dotted line and say, I'm going to pay this, you really should pay it.
You really should. Absolutely.
Wouldn't you want to be paid? I mean,
I talked to a customer, single parent, gone through a nasty divorce, worked part-time, trying to feed 5 kids.
Whoa.
I mean, her life was ugly, trying to maintain it, trying to be respectful, somehow trying to keep up on payments, not getting any support from her ex. And so there are a lot of stories out there like that. Which
moms tend to do that when they get divorced because they love those kids. They don't want to disturb the kids' lives, and so they'll do what they can to hang on to the house. But in some cases, they really are better off,
Yeah.
But so how'd that story end? I didn't mean to interrupt you.
Well, it's unfortunate because her options are, and she has equity in her house.
She does.
Her options are to sell her house or get caught back up. She was quite a bit behind on the mortgage, and it's a very difficult decision that only she can come up with because, as I shared with her, sell your house. Where am I going to take 5 kids? So she had that other side of the equation that was difficult on her.
I want to throw this comment out there. You mentioned about the dads that aren't even supporting the ex with the 5 kids. If you brought 5 kids into the world, man up. Do the right thing.
You got that right.
You're not kidding. You got that right. It's just wrong. It's just, it troubles me when men don't act like men. Anyway, you were listening to the Peter McClellen Show. We have our guest, Brian Parkinson, mortgage banker with RMG. And when we come back, we'll continue our conversation.
Connect with me at 612-282-5863. Email me at brian@brianparkinson.com.
Wonderful. When we come back, we'll continue our conversation about what's gone on, where we are, and what the prospects are for people today.
This is the Peter McClellen Show on Business 1570.